Welcome back to another episode of our channel, where we bring you the latest news and insights on the tech industry. In today's episode, we'll be talking about collapse of Silicon Valley Bank, a bank that has become synonymous with the growth of the tech industry. Founded in 1983 in California's Silicon Valley, SVB has grown to become a leading provider of financial services to technology and innovation-focused companies. The bank offers a range of services, including deposit and lending products, cash management, foreign exchange, investment services, and more. Its clients range from early-stage startups to established public companies, as well as venture capital and private equity firms. What sets SVB apart from traditional banks is its deep understanding of the technology industry. The bank's experts provide research and insights into trends and developments in the tech industry, helping its clients stay ahead of the curve. With its focus on the technology and innovation sectors, SVB has become a prominent player in the tech finance industry and has played a key role in the growth of Silicon Valley and other tech hubs around the world. SVB's success story is a testament to the power of innovation and the role that financial services can play in supporting the growth of emerging and established companies. We hope you found this episode informative and insightful. Silicon Valley Bank has supported the growth and development of many successful technology companies over the years. Apple Incorporated. SVB provided Apple with a line of credit in its early days when the company was still a startup. Google. SVB was one of Google's banking partners, providing the company with financial services and advice as it grew from a startup into a global technology giant. Cisco Systems. SVB was a key partner for Cisco in the early days, helping the company secure financing and providing cash management services. LinkedIn. SVB was one of LinkedIn's banking partners, providing the company with financing and other financial services as it grew into one of the world's largest professional networking platforms. Tesla. SVB provided Tesla with financing and other financial services as the company developed its groundbreaking electric vehicles. These are just a few examples of the many successful technology companies that have worked with Silicon Valley Bank over the years. SVB continues to support and partner with emerging and established technology companies, and its expertise and focus on the technology industry have made it a trusted and valuable partner for many in the industry. Silicon Valley Bank is a significant player in the banking and finance industry, particularly in the technology and innovation sectors. SVB is a publicly traded company with a market capitalization of over $15 billion as of March 2023. The bank has over 5,000 employees worldwide, with offices in the United States, Europe, and Asia. SVB manages over $220 billion in assets and serves over 35,000 clients, including technology and life science companies, venture capital and private equity firms, and high-net-worth individuals and families. In 2021, SVB reported net income of $1.6 billion and total assets of $121 billion. SVB has consistently been ranked among the top U.S. banks in terms of customer satisfaction, according to surveys by J.D. Power and other organizations. In 2018, a new law was signed by President Donald Trump called the Economic Growth, Regulatory Relief, and Consumer Protection Act. This law aimed to stimulate economic growth by easing up on regulatory requirements that were imposed by the Dodd-Frank Wall Street Reform and Consumer Protection Act after the financial crisis of 2008. One of the provisions in this new law was the loosening of stress testing and cash-on-hand requirements for large banks, including Silicon Valley Bank. This change was welcomed by SVB's CEO, Greg Becker, as it allowed the bank to allocate more resources towards serving its clients in the technology and innovation sectors. With the burden of regulatory requirements lifted, SVB was able to focus on its primary goal of providing financial services to technology-focused companies. This development was well received by many in the industry, as it allowed SVB to continue playing a crucial role in supporting the growth and development of these companies. The economic growth, regulatory relief, and Consumer Protection Act was seen as a positive step forward for SVB and other large banks, as it enabled them to better serve their clients and promote economic growth. The COVID-19 pandemic brought about a boom in the tech industry, and Silicon Valley Bank, SVB, was at the forefront of this growth. The bank's deposits doubled from $62 billion in March 2020 to a whopping $124 billion in March 2021, a clear indication of its success in serving the technology and innovation sectors. SVB invested a significant portion of these deposits in long-term bonds, a strategy that seemed sound at the time. However, as inflation began to surge, the Federal Reserve responded by increasing interest rates, specifically the federal funds rate. This move had a significant impact on SVB's bond portfolio, as rising interest rates meant that the current market value of its older bonds decreased, leading to mark-to-market losses in excess of $15 billion at the end of 2022 for securities held to maturity. As interest rates continued to rise, the effects were not just limited to Silicon Valley Bank's bond portfolio. The tech industry, which SVB served, was also feeling the pinch, as it became more difficult for startups to raise additional funds to fuel their growth. This led to a domino effect, with startups withdrawing deposits from SVB to cover their current expenses, ultimately leaving the bank short on capital. In an effort to address this shortfall, SVB made the difficult decision to sell off a portion of its bond portfolio, resulting in a loss of $1.8 billion. This move was seen as necessary to ensure the bank's continued financial stability and ability to serve its clients in the technology and innovation sectors. Silicon Valley Bank, once a titan of the tech banking industry, is now in crisis mode. Just a week ago, the bank received a warning from Moody's Investors Service that its credit rating was in danger of being downgraded due to its unrealized losses. On March 8, SVB announced it had sold $21 billion worth of its investments, borrowed $15 billion, and was planning an emergency stock sale to raise $2.25 billion. Despite these efforts, Moody's still downgraded SVB. The news sent shockwaves through the financial world. Shares of SVB Financial dropped more than 62%, wiping out billions of dollars in value. The situation only got worse when investors at several venture capital firms urged startups to withdraw their deposits from the bank. On March 9th, customers withdrew a staggering $42 billion, leaving the bank with a negative cash balance of about $958 million. The bank's customers were understandably concerned about the safety of their deposits, and many rushed to withdraw their funds. As news of the bank's collapse spread, panic set in. The value of the company's shares fell 66% in pre-market trading on March 10th before trading was halted. In a press conference, SVB CEO Greg Becker assured customers and investors that the bank was taking steps to address the situation. Greg Becker said, "We understand the concerns of our customers and investors, and we are taking decisive action to stabilize the bank. We remain committed to serving the technology and innovation sectors, and we are confident that we will emerge from this crisis stronger than ever." On March 10th, a team of examiners from the Federal Reserve and the Federal Deposit Insurance Corporation arrived at SVB's offices to assess the bank's financial situation. Later that day, the California Department of Financial Protection and Innovation issued an order taking possession of SVB due to inadequate liquidity and insolvency. The FDIC was appointed as the receiver and established the Deposit Insurance National Bank of Santa Clara to reopen the bank's branches the following Monday and enable access to insured deposits. This failure of SVB was the largest of any bank since the financial crisis of 2007 to 2008, and the second largest in U.S. history. The bank's CEO, Greg Becker, was removed from the board of directors of the San Francisco Federal Reserve. While uninsured deposits represented 89% of total deposits at the bank, Moody's Investors Service reported that it expected a recovery rate for uninsured depositors of 80 to 90%. The FDIC also announced that it would begin covering uninsured deposits with special dividends within days as SVB's assets were liquidated. The Bank of England sought a court order to place the UK subsidiary of the bank into a bank insolvency procedure, while Shanghai Pudong Development Bank issued a statement that its joint operations with SVB were not affected by the collapse. The collapse of SVB is a stark reminder that even successful banks are not immune to market forces and the risks inherent in investing. It also highlights the importance of regulatory oversight and the need for banks to maintain adequate liquidity and capital reserves. On March 10th, Silicon Valley Bank collapsed, causing significant impacts on tech startups and other businesses that held uninsured deposits at the bank. While experts believe that the effects are temporary and that SVB's collapse poses no systemic risk to the U.S. financial system, many companies face significant risks due to their inability to retrieve their deposits. Some startups had to take out loans to pay their employees, while others may have to furlough or lay off workers or shut down entirely. The collapse also affected large companies such as Roku, Roblox, Vimeo, and Circle. Roku revealed in a Securities and Exchange Commission filing that a quarter of the company's cash reserves were held by SVB. Circle, which issues USD Coin, used SVB as one of its banking partners to manage its cash reserves for USDC. The collapse caused USDC's price to fall below its $1 pegged exchange rate, and Coinbase had to halt conversions between USDC and US dollars. Outside the technology industry, Vox Media had its cash concentrated at SVB, causing its SVB-issued credit cards to stop working. The California wine industry was also affected by the bank's collapse, as it was a leading regional winery banker. SVB's collapse caused a combined $100 billion in market capitalization losses for U.S. banks in 2 days and $50 billion for European banks. SVB's losses were partly due to selling low-yield bonds that the bank had intended to hold to maturity, but had not marked to market in the current interest rate environment. The bank's failure highlighted concerns that other banks could have similar unrealized asset risks in their portfolios. However, experts believe that other banks will remain stable as SVB was overly specialized in providing banking services to a risky sector of the economy, and financial regulations have strengthened since the 2008 financial crisis. Under the 2010 Dodd-Frank Act, banks deemed systemically important, including large regional banks such as SVB, are subject to certain financial regulations, including periodic stress testing and the requirement to adopt a resolution plan to wind down operations in the event of bank failure. In conclusion, the collapse of Silicon Valley Bank serves as a reminder of the potential risks in the banking industry, especially in a highly specialized sector like technology startups. However, experts believe that the overall financial system remains stable, thanks to stronger financial regulations put in place since the 2008 financial crisis. While the collapse has caused some hardships for startups and companies that had deposits with SVB, the FDIC is working to ensure insured and uninsured depositors receive as much of their money back as possible. Ultimately, this event highlights the importance of diversifying one's financial holdings and being aware of the potential risks involved in any investment. Thank you for watching, and don't forget to subscribe for more informative videos like this one.